Hello everyone and welcome to my weekly update with me, which is Perry Market Analyst at Hantec Markets. Each week I'll take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had a lot going on. We've still got the trade tariff concerns that are driving market sentiment. Friday we saw the extension, presumably, of the US's policy on this with targeting European automakers. So that has again ramped up the situation in Europe and continues to also sort of play out with the China side as well, with those $200 billion worth of trade tariffs that could potentially be coming through in due course. So we've got the market that continues to find struggling risk appetite on the back of this news, with obviously the safe haven plays playing out as a benefit to this. We've got the likes of the yen benefiting, gold tends to find a bit of support, and also treasury yields as well start to fall. And that is also equally seen in the equity markets, where we see the higher risk or relatively higher risk asset class of equities coming under pressure. Certainly in the European markets with the export heavy DAX, specifically in the autos side of the export heavy DAX, but still the DAX falling quite sharply on Monday morning as the concerns continue to accelerate. And so we've got not only that, but also the dollar moving in quite an interesting fashion in the last couple of sessions. We've started to see that the dollar strength has been just sort of edging a little bit lower, and it'll be interesting to see this week as it develops whether this continues to sort of come through as a sustainable correction on the dollar, or if it's just a little blip in the medium-term strength that we have seen in the past couple of months. So that they are the two main themes: trade tariffs and the strength of the dollar this week, and how that sort of develops. So in terms of your Forex markets, we see that the euro is starting to find a bit of support. We've seen the data picking up. We saw on Friday the PMIs for the eurozone starting to perform better than expected. Also, you started to also see a little bit of US data, which disappointed. So if that turnaround becomes a bit of a theme, where the eurozone data surprises positively, US data surprises negatively, we could start to see a sustainable move higher on euro dollar. It's very interesting to see if cable starts to also react higher, because we did see on Thursday the big turnaround in the dollar actually was triggered initially by the turnaround on sterling, which was driven by the Bank of England coming out more hawkishly than had been anticipated. And the rebound in sterling has sort of taken hold since then. A little bit questioned on Monday, but again, will it start to build? 32 big figure on the cable rate seems to be a bit of a level where you'd want to see sterling starting to build support again for a higher low, and then we could start to see possibly sterling ticking up again. But a lot of overhead supply still to get through on sterling. Similar, I suppose, with euro dollar. Euro dollar sort of moving up from that floor at 115 big figure. Can it hold above 116 figure, pushing up to 117, 118? They are the sort of levels that you start to see the overhead supply coming in for euro dollar. Now we've got dollar yen, which is also an interesting turnaround. Safe haven play, the yen is benefiting. That's now broken a 3-month uptrend on dollar yen. And 109.50 area seems to be a key basis of support. If that continues to sort of break down below there on a consistent basis, we could see the market turning quite strongly lower, maybe back towards the 108 area, which is sort of basically the floor of what is an increasingly looking like a bit of a trading range on dollar yen. Into your equity markets, well, I think that what we've seen is certainly in the European markets, we've seen a rolling over. We've seen lower highs and lower lows forming. We've seen the DAX breaking below 12,600, which is a key level. That's been a medium-term pivot which had been supportive and is now becoming a basis of resistance. If the market continues to trade below that, you could see 12,300 and possibly even 12,000 big as a level there, because there's a 600 tick top pattern that targets that 12,000 level on the DAX. FTSE 100, if it continues to, or if it breaks below 7,600 on a consistent basis, again, that then reopens a corrective move towards 7,300. So some key levels there. Now, in terms of Wall Street, there's a slight outperformance that again will happen when the when the markets fall away on these trade tariff concerns, and what we have got on the S&P 500 is a really strong pivot level around the Fibonacci level, the 61.8% Fibonacci level of the corrective move from February to April comes in at 2,742. Now, if that level is broken to the downside, we could start to see more of a corrective move. So that is the key level we need to watch on the S&P 500 this week. Now, commodity prices have been certainly choppy in recent weeks. We've seen the gold price coming sharply lower. We've seen the oil price also corrective, but for different reasons. But the gold price has started to find a bit of support. 12,600 on gold seems to be a support forming. Is this going to be a support that's sustainable? Well, I think it depends on whether the dollar continues to correct or not. If the dollar does start to correct on a sustainable basis, then we could see gold rallying to 12,008, maybe 1,280, maybe $1,300, and that will be an area where it's a key resistance, a key overhead supply. That is where the bulls have a big decision to make on gold. But I think it depends on whether we see the dollar which turns corrective or not, and that is, I think, key, more key than the safe haven flow, because certainly it seems as though the dollar is driving the gold price at the moment. In terms of oil, we've seen OPEC. The OPEC decision on Friday and subsequently Saturday seems to have put the market in a bit of a muddle, because what we've seen is the Brent price sharply lower on Monday, but subsequently we've also seen the WTI price actually rising. Now this is because the market doesn't overly know how to take this this outcome from the OPEC meeting. It seems a little bit cloudy as to exactly how to be read, because they didn't put exact levels on it. Some suggesting, the Saudis suggesting maybe 1 million barrels of true market supply coming back in. Whether that actually is seen on the compliance basis is the big factor, the big question mark. But at the moment, Brent crude is lower. It'll be interesting to see if it can start to build support, though, because WTI has broken to the upside above 67.15. That was a key level to break out. $70 is a resistance on WTI. Now, data-wise this week, well, we've got a fair amount of data, but not necessarily tier 1 data. I mean, you've got some growth numbers at the end of the week, but they are sort of the final reading of GDP for the US and the UK. No revisions are expected there. But I think what is more important than that is these inflation numbers from the Eurozone on Friday, and also the core PCE for the States. Now, Eurozone CPI, the flash CPI, is actually expected to dip slightly to 1%, but the headline is expected to move higher to 2%. We've got the chart here on the graphic that shows you the Eurozone inflation data. Interesting to see how these two lines actually move this week, and if there's an upside surprise, we could start to see the euro rallying quite strongly. Now on core PCE, it's expected to tick higher to 1.9%. The market seems to be fairly confident that inflation in the US is rising, so that wouldn't necessarily be too much of a surprise, but again, we'd look for any number higher or lower than 1.9%. So lots going on this week as ever. Trade concerns continue to drive the market, and also the dollar. So I wish you good luck in your trading this week, and I will speak to you next time. Thank you.